Cruise stocks traded sharply higher today after Citi upgraded Norwegian Cruise Line to buy from neutral and raised the price target on Carnival and Royal Caribbean. The firm has a buy rating on both of those stocks as well. Joining us now, the analyst behind that note, James Hardiman. James, good to see you. So you said there's been a confidence deficit in Norwegian over the years. What's changed?
Yeah, I think for Norwegian specifically, and this isn't an issue that I think the other cruise companies have been saddled with. It's the previous strategy was really quality at all costs. And the problem is those costs tended to be pretty substantial. And so Norwegian has never had a problem driving pricing and yield growth. The issue is that so much of that growth was eaten up by runaway costs. They brought in a new CEO within the last year or two with a renewed focus on costs. And so it's a much more balanced strategy. And that gives us confidence that what we perceive to be really encouraging demand trends will ultimately fall through to the bottom line and really create a lot of value here.
So I'm looking at 5-year charts of some of these names. Royal Caribbean really stands out in that it's above where it was in late 21 before that big drop in 2020. I should say early in late 2020. What have they done differently, and how much of it does have to do with those costs?
Well, I think on the Royal Caribbean side, what haven't they done differently, right? They have been best in breed on so many different levels to the point where it almost feels like they're a different breed altogether, a whole different animal. I trace a lot of their success back to the opening of what's called Perfect Day at Coco Cay, their own private island in the Bahamas that they invested significantly in and really changed the trajectory of cruise travel for the better. If you've never been, I certainly would recommend it. But it really begun the evolution of the industry and the perception that so many people have of the industry, which historically has been a fairly negative one. And then you layer on top of that these icon class ships, which you've probably seen the commercials for. They're kind of hard to avoid. I think what cruise travel represents today is not only greater than it's ever been throughout its long history, but I think it's also catching up with traditional land-based vacations, which you could argue are actually getting worse, right, based on service levels and customer satisfaction. And so on top of that, there's been this pricing deficit, cruise to traditional vacations that's or at least was larger than it's ever been, and I would argue should be more narrow than it's ever been. And Royal Caribbean has really been at the forefront of all of those trends.
And Carnival, even though it's not growing much on the top line, you think it's getting its books in order?
That's right. I mean, Carnival, I think, is an underappreciated cash flow story. And so one of the things that they've done coming out of the pandemic, where they had to layer on a whole lot of debt, which really impaired their balance sheet, is they've scaled back their order book. And so they've only got 2 ships on order over the next 3 years. That hurts their top line, but it does help their capital expenditure line, which in turn is going to help their free cash flow. And so by our math, we think they're going to generate, call it $9 billion of free cash flow over the next few years, the vast majority of which is going to go towards paying down debt and decreasing that interest cost. And so net on the earnings line, we actually think they're going to be the fastest growing of the 3, which is certainly not the perception there. So I think that it's a different path, but I think it's an exciting story nonetheless.
Did COVID fundamentally change the cruise business as a business, or was it more this exogenous event that shook things up and proved out who had the better strategies?
Yeah, I mean, I never thought back then that I would be saying this, but it's proved to be a fairly exogenous factor that I think the industry it's going to take a while, right? The biggest impact was the impact on the balance sheets of these companies, and that is not something that you fix overnight. But I think from a customer perspective, people aren't concerned about COVID anymore, and I think the demand is higher than it's ever been. If anything, scaled back capital expenditures, right? New cruises coming online have helped the industry and allowed that demand to translate into better returns prior to the pandemic, there were concerns that it was building out too quickly. And the pandemic really slowed a lot of that down and has created much more of a favorable environment as we think about that supply-demand balance.